Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and I have Jason O'Donnell on the line. He's Chief Investment Officer at Bluestone Financial Institutions Fund. Jason, how you doing this morning?
I'm doing well. How are you?
Good. Thanks for coming on. When we get a new guest on, we always like to find out a little bit about their education and their market background and how they ended up in their current position.
Sure. So, I actually launched, along with a couple partners of mine, a hedge fund called Bluestone Financial Institutions Fund just a couple of weeks ago. So we're pretty excited about the product, which is focused squarely on the bank space, particularly small and mid-cap banks in the U.S. And I had previously served as a principal and director of research at a firm called Merion Capital Group. I was one of the founding members of the firm, and it's actually a sister firm to Bluestone. I was also director of research at Boenning Scattergood, which is a regional brokerage house on the sell side, covering small and mid-cap banks for several years. And before that, I was at a firm called Ryan Beck on the sell side, covering really small and mid-cap banks in the New England and Mid-Atlantic markets.
Did you kind of just fall into the bank space, or is this something that always interested you?
Well, sure. So, it's something I fell into. I think a lot of us that get our start on the sell side, oftentimes we don't get to choose the field that we end up in. So, oftentimes, as was the case with me, the opportunity emerges, and for me, it was banks. I think banks are less sexy, less interesting from the outside, but as you dig into them, you begin to realize that there's tremendous amount of opportunity in this space, as there are, in other spaces as well.
Okay, and just talk about your research. I mean, are you, very focused, on the balance sheets of these small and mid-cap banks, or how do you conduct your research?
Sure. So we're highly quantitative in our approach. That's very much a bottoms-up thought process as opposed to sort of doing screens and picking themes. Although we're paying attention to a number of themes in the space, it's something, we look at a bank, we're focused very heavily on their ability to grow what we call core value. Which is really just the tangible book value of the company, and obviously the EPS power. Those two are the key components to what we focus on that we think drive stock price action very effectively.
Do you have a symbol for the fund that you just launched?
No, we don't. It's not as a hedge fund, so it's not publicly available. Okay. But we do have a website that if folks have questions on the fund, they can certainly reach out to me.
Okay, we will have them do that. Before we move on to particular stocks in the sector, technical analysis, is that something that you pay much attention to after perhaps you decide a stock or something that you're going to target? Do you go to the charts at all, or do you leave that to other people at your firm?
Sure. So we certainly have a lot of respect for technical analysis and what that could signal. I think for us, it's been really more of a secondary factor. So if we evaluate a particular institution that we have an interest in, and we're unsure as to exactly where the entry price should be for that name, we will look at technical analysis. But we do rely pretty heavily on those in the know in that area to kind of instruct us and to give us their signals. Fundamental analysis is really what we do best here.
Okay, so you follow small and mid-cap banks. So could you just give us the differentiations between those two? Kind of like, okay, this is the smallest thing we'll look at, and then we're not looking at anything bigger than this.
Sure. So we're focused on in the small cap space. We define that as 300 million to 2 billion in market cap, and then we have asset definitions as well. On the mid cap side, it's 2 billion. We'll probably go up to maybe 5 or 6 billion, and so I would consider that kind of the smaller half of the mid cap. And the opportunity there is really the reason why we do that is because there's a couple things. I think in the large cap arena, Obviously, there's more liquidity, but we think that fundamentally there's a lot of reasons why the large caps are less attractive. Obviously, the government has declared war in some form or another against many of the larger U.S. institutions. We think that is having an effect on valuations in that space. And so they're just less attractive. There's not as much growth as well, frankly. Most of the growth, the true kind of growth names, to the extent there are growth names in the bank space, which there are, they're really in that small and mid-cap area.
Okay, so can you give us some particular issues that you're looking at in this sector?
Sure. So one of the names that we like a great deal is Bank of the Ozarks, which is ticker OZRK, which is based in Arkansas. But they really have a footprint that's located throughout most of the southeastern portion of the United States. They also just bought a bank in New York City. They've got a market cap probably somewhere around $3 billion at this point. The guy that runs it his name's George Gleason. He's one of the, in our opinion, one of the finest CEOs in the country. And as you begin to look at banks, you realize that what's critical to understanding kind of the fundamentals, at least, is understanding the quality of management. This is somebody that grows, that's been very focused on growing what we call core value, and he's done it through FDIC-assisted acquisitions back when banks were failing left and right. He's now doing it through what I would consider to be highly accretive whole bank M&A transactions. So he's looking out at the landscape in the U.S. and saying, there's big opportunity for me to continue to acquire, and he does it in such a way that's highly accretive. The valuation is a bit pricey for some. That trades at a very high level on conventional metrics, but the growth is outstanding.
Okay, and that thing trades 600,000 shares a day up to 1 million, so pretty good liquidity in that. But this is like a long-term hold. They're more on they're more of the acquiring end of things than being acquired.
That's correct. Yeah, they're definitely on the hunt. I wouldn't put them in the seller category. So I think there's, clearly you can play the bank space right now in two different ways, either the buyers or the sellers. We're seeing a significant increase. It's been steady. Hasn't been the wave that so many talked about, but we're seeing a steady increase in acquisition activity. Acquisitions are pacing near 80 or 90 on a rolling 3-month basis. That's up nearly twofold from where we were just a couple of years ago. And that means very positive things. Not only can you play the buyers and the sellers, but there's also, that means very positive tailwinds as it relates to just overall valuation multiples. As whole bank M&A continues to increase, we think that means really good things for banks in general in terms of their overall valuations.
Are there any particular regions in the country that you tend to favor over others?
Well, sure. It's interesting. I think there's some really unique opportunities in Texas right now. Texas has been a tremendous, has obviously been a tremendous economy there for some time. And with the decline in the price of oil, you've seen financial institutions, of course, certainly banks, get hit pretty hard. And many of these names are high growth names. There's a bank by the name of Texas Capital, ticker TCBI, which we like a great deal. Certainly what we would consider to be, going back to this management issue, best in class management. They've got a tremendous capacity to grow core value by focusing on this commercial real estate and C&I business that they have that's very diversified. So our view in Texas in particular is that there's a lot of opportunity there, particularly with the valuations coming in on the decline in energy. And I don't think, based on our conversations with managements there, of which we've had many just in the last few weeks, we're not convinced at all. We don't think that the decline in energy is nearly as much of a headwind as so many are fearing in that market.
It's a really, well, first of all, this is an extremely interesting chart. I mean, you could put, I have the daily chart up, and I guess if you just want to juxtapose that over the crude oil market here, it looks like just about the same thing. I mean, this has come down a little bit more since the beginning of the year. I think it was one of our guests, I can't remember who it was or if it was something that I read, that said that, that the Texas banks are really, they have discounted, the price of oil much more than, perhaps Russia or some of these other companies. So that kind of fits with your thesis. I mean, it looks like this stock is just, they've just taken it out and beat it because of the slide in crude.
Sure, and if you look at the historic valuation, so of course when we're looking at investment opportunities, we are paying attention to where is the stock trading relative to its own history on price to core value or price to tangible book value, et cetera, and then where does it trade relative to the group? And so Texas Capital is now a name that, in my opinion, trades relatively in line with banks that have inferior fundamentals. So this is a name that I would take a hard look at. It's one that we're very interested in, given the lower valuation.
Okay, and just moving on to other stocks, we got a couple ones you're looking at. Texas Capital Bank shares, also Bank of the Ozarks. I mean, we're domiciled in Michigan. Are there any banks in Michigan that you follow or on your radar?
So a lot of the names that we like in the Midwest and in the upper Midwest would be smaller in size, just given the nature of those markets. There is one of the best performing banks in the country, which is relatively much less liquid than some of the names we just talked about. Is German American Bancorp, ticker GABC. I think in the we know the management team very well, and it's for those that are able to get down in terms of that liquidity level, we think they do a tremendous job not only growing the bank organically, but being able to potentially acquire and grow core value that way. Some of the larger names in that region are much less interesting to us from a valuation standpoint.
Okay, I gotta ask you before we let you go. Of course, with the banking sector, much of it's tied to interest rates, and we have the Fed coming to a decision today. We've had a lot of debate about the outlook for interest rates and banks that are banking on higher interest rates, to improve their performance. Don't know if that's going to happen. Could you just give us your shorter term and longer term outlook for interest rates?
Absolutely. So we saw a 30% move in the small and mid-cap bank space in 2013, and that was built squarely around this idea that interest rates were heading higher sooner rather than later. And we haven't seen it yet, of course. Last year in 2014, the bank market rally stalled a little bit over concerns regarding exactly the timing of when those interest rates would materialize. So our view is that if we don't see interest rates increase this year, our expectation for the bank stock market is a relatively flat trajectory. We think if we get interest rate increases, even though they're not going to help fundamental performance, even at 50 or 75 basis points targeted rate increases by the end of this year, we do expect that to be a big positive for the bank universe. Keep in mind that the median EPS growth rate right now for small and mid-cap banks is 10%. My expectation, based on the models we've run, is that we expect that metric to move around 13 or 14% for next year, for 2016, in the event that we see Fed funds targeted higher. So that's a lot of it may not sound like a lot, but 3 or 4% can have a significant impact on the multiples and on valuations.
Okay, we've been on the line with Jason O'Donnell. He is Chief Investment Officer at Bluestone Financial Institutions Funds, focusing on the small and mid-cap bank sector, giving us a look at interest rates. Jason, thanks a lot for joining us. We hope to have you on again soon.
You're welcome. Thanks very much.